Hello everyone, and thank you guys for tuning back into another video. As always, if you enjoy the content, make sure to leave a like and subscribe. So back into the video, what I'm going to be doing today is going over some of the trades that I ended up taking last week, which is the week before Labor Day. And we did end off the week in the red. It was $27 in the red, or 0.80%, so just under 1%, which is a relatively small red week. We were down a lot more early in the week. I ended up taking a $390 loss, which was there was multiple factors which went into that trade that I'll explain later in the video. But slowly but surely, I ended up digging myself out of that 390 loss. And after a couple of trades, I ended up basically making almost every single, or basically making up the whole loss. We came up $27 short, but having a $27 red week compared to a $390 red week, I'll take that any day of the week. So the first trade that I'm going to explain in this video is a trade on SPY that I did. I ended up buying puts on this. I actually ended up trading it later on in the week, but the trade that I'm going to explain today is the one that I took August 23rd. So I took a medium-sized position on SPY puts. It was 6 contracts for a price of $250, and I ended up selling them the same day at 2.65. So it was a 0.15 or $15 win on each contract. So 15 times 6 comes out to be 98. So until it was a $98 win, which was definitely short, or definitely small compared to the actual amount that I could have won, considering how much SPY had been moving. You see, it had these really big swings. It was trading near the 292, then it gapped down to 283, and then it did those same moves later on in the week. So definitely a lot of money to be made on SPY. But that's pretty much it for this trade. I'll get into some more details later on in the video. But the next trade is the trade that I ended up losing $390 on, which was on Apple. And if we go down, I actually ended up trading it later on in the week as well. But the trade that I'm going to explain today is on August 27th, I believe. Yes, it was on August 27th right here. So what I ended up doing is I ended up entering a position on... First, I ended up entering 6 contracts with a price of 2.38. And then I ended up trying to average down and increase my position. I entered the next 4 contracts at $2.23. And so I had a total of 10 contracts, and I believe the average price was around 2.32, and I ended up selling them at 1.93. So I had a if you guys remember, it was a 390 loss, and I'll kind of go into a little bit more in detail when I show you the chart. But to be honest, in my opinion, the chart setup still kind of looked good, but it just was not on my favor. And sometimes you have to realize that not every single trade is going to go in your favor. And unfortunately, that was the case in this trade, along with some other factors that I'll get into in a bit. But that's pretty much it for this portion of the video. Now I'm going to go ahead and pull up the charts and kind of go a little bit more in detail as to why I took these trades. So this is the SPY chart, and what ended up happening in this trade was that on Friday the 23rd, that's when news was released about some the tariff retaliation by China. So SPY ended up gapping down a lot once the market opened. It kind of started going up a little bit once the market opened, but after the news was released, you see this really big red candle of almost $5, which it dropped. It dropped from a high of 292 all the way down to 288, and it continued to drop all the way till the rest of the day, basically. But what I was waiting for was for it to try to have a dead cat bounce, because it was definitely getting oversold. If you look down here at the RSI, definitely oversold. It was getting near the 20s, and so what I wanted to happen was for it to have a a little bounce and to get a better entry to be able to short SPY even more. So that's exactly what I ended up what ended up happening here around 11 o'clock. If you guys remember the trade history, I got in at about 11:18, and so right here, after I saw that it tried to making a nice move towards the uptrend, it got rejected at the EMA line, which is the green line, and so that's when I decided to open the put position, and I bought, I think it was 4 contracts, I believe. I could be wrong. It could have been 6, but it was a relatively small position. But it ended up working perfectly because you see, once again on this next red candle, it got rejected from the green line, which is the EMA line, and it continued to downtrend even more. I got out fairly quickly. I was out in and out in the trade in about I want to say like 10-15 minutes, so I ended up locking in profits of $100. Although if I held on longer, you see it continued to drop, so I definitely could have made a lot more money. I remember I got out around the 286 area, and if we go ahead and keep on scrolling down, we can see that it got as low as 283, and then it kind of just continued to trade sideways after that. So I definitely left a lot of money on the table on this one. I think I could have made close to $1,000 because the options that I ended up purchasing actually went in the money during this whole drop right here, because I think when I traded them, they were out of the money, but at the end of the day, they ended up being in the money because of how much SPY dropped. You can see that it had a high of almost $293, and then it ended the day all the way near with a low of 283, so almost a $10 move in one day on SPY because of the tariff news. But that's pretty much it for this trade now. So this is the Apple chart, and as you guys can see, on the 27th, the day that I traded it, it kind of just downtrended the whole day, and there was two main reasons as to why I ended up losing $390 on this trade. The first reason was that because the Wi-Fi that I was using was pretty slow. I started school back again, and the Wi-Fi that's open for the students is basically the same Wi-Fi that every student uses, because it's not the one that is on the school computer, so that's why it was relatively slow. But that wasn't the main reason why I ended up losing. The main reason was because every time SPY tried to do a reversal and it crossed over the EMA line, which is the green line, it was a fake reversal because it did not continue that trend, and you guys can see that it ended up crossing almost on every single candle the EMA line, which is the green line, like I said before. And in most cases, when that happens, that is a bullish reversal. But you can see that it was just kind of a fake reversal every single time. So all throughout the day, we were just having these fake reversals, and Apple just couldn't continue its uptrend, and it slowly kept on bleeding. So this is what I mean when sometimes, even though the technicals are there, sometimes the chart's not going to play in your favor. And so I was lucky to get out at a relatively small loss compared to the actual position size that I had. I think I had around a $3,000 position, and so I only lost rounded to $400, which is not a lot compared to, like I said, how big of a position I had. I got out at around I think it was around a dollar, or it might have been a little bit less than $1 move on Apple. So if we would have kept on holding, you see that it kind of just kept on bleeding all throughout the day. So this could have potentially turned into a really, really bad trade, because it kept on getting or showing these fake reversals, because it never actually did reverse. And you guys can see that this sell-off just kind of continued, and it did eventually have a somewhat of a reversal towards the end of the day, but that didn't really work too good, because it kind of ended up getting rejected once again, and the sell-off just continued. And then into the next following days, it kind of just traded sideways. It did end up gapping up Thursday the 29th, but by then I looked at the option chain again, and we would have barely been breaking even after this big gap up because of the time decay on the options. So overall, I think it was a definitely a good idea to cut losses, even though it was a $390 loss. But the trade could have gone a lot worse. So that's why I always say that it's better to cut losses and continue trading than rather focus on one trade and just kind of hold it and hope that it's going to go back up. But likewise, we did end up, like I said, the green in. We did end up the week slightly in the red, but going from starting the week in negative 390 to ending the week in negative $27, I definitely see that as a win. Even though it's not, we still ended the week in the red, but I rather end the week $27 in the red than $390 in the red. But that's pretty much it for this trade and this video. I'll explain the rest of the trades that I ended up taking last week in the following videos. I hope you guys enjoyed, and as always, make sure to like and subscribe. I will see you guys in the next video.